It just goes directly to stop loss, which then in that case I'll be taking a loss and you won't be. But then on the flip side, there's the argument that there's those trades that is just tap and go.
Exactly.
And let's say you have a doji candle, you have an advantage now because you've got a candle that you can place a trade entry. But let's say the next candle isn't engulfing. I would be in, and I can already start to to break even.
Exactly.
And now you're getting in at a very bad entry compared to mine. So and I tested it, for me it just got complicated. I didn't like it as much. So we can discuss it. What is the advantage you're seeing in waiting for a candle closure on M1, I guess? As opposed to just a limit on a zone.
So what I've seen is gold doesn't like to do tap and go.
Okay.
It is I've seen that work very well with forex pairs, way well, but gold doesn't like to do that. Gold loves to trap people, gold loves to trick people, and that's why I've used this approach of holding, waiting for the candle closing.
In fact, we should probably establish this because in the last year, I don't know if your trading has changed a lot or what things you've developed, but let's just do a walkthrough of like a A+ setup for you right now on something that you'll take on a prop firm.
So let's talk about my London setup, which I trade. I call it the London continuation. That's what I've named it.
Okay.
And
this is on gold.
This is on gold, yes. So what I've seen is that it all starts from Asia range. Now, so one of the major changes that have happened from in the last year in my trading is that I've started following time windows very strictly, because eventually when I started journaling and when I started reflecting on my trades, I realized that it's falling under the same time window. So it's not a coincidence. So that's when I started studying time windows much intensively. So it all started with Asia range. Now, if gold has an Asia range of less than $10 to $15, that's when London is going to give a big move. It happens 70 to 80% of the time.
Okay.
If Asia range is above $10 to $15, and then if price is moving, it has to sweep the internal liquidity of Asia for it to give a move in London.
Internal liquidity of Asia or Asia high, Asia low?
Internal liquidity of Asia.
Okay,
if it's wide.
Yes,
if it's narrow, if it's less than $10, then Asia highs and Asian lows should be taken out for a good move in London. So that's what I look at. I keep Asia range as my reference. And let's say if it's less than $10, it takes out the highs, or if it takes out the low. Let's say my bias is long. It takes out the lows. I would be happy to see that it takes out the lows and it's giving a bullish reaction. Then let's say it has come to the midpoint of Asia range. Now I'll wait for London Open. The next break of structure in London Open on 5 minute is where I enter. My stop loss would be below that, and my target would be 1:3 or 1:2.
Okay. Why have you decided a 1:3, 1:2 take profit as opposed to technical based levels of taking profit?
So 1:3 has really worked out well for me in terms of testing, because London definitely like 70 to 80% of the time gives a very aggressive move, like no red candle move. It's just green for like 5-10 candles. And so 1:3 works out well. But what I've seen also is that when I use 1:3, my win rate goes down. So I like to keep it at 1:2 when I'm trading a prop firm account.
Why do you feel your win rate goes down when you target a 1:3? Are you not doing a break even?
No.
Traders.
But that is, I mean, if I start doing the break even or I start taking partials, my win rate would remain same. But generally, I still have achieved a higher win rate with 1:2.
Okay, interesting. Why have you chosen not to add in a fast break even protocol or just a break even protocol in general?
Because gold loves to retest the levels where it started the move from.
Okay.
So that happens quite often, and trailing stop loss to break even doesn't really work. What has worked well for me in this is taking half at 1:1. Because if I take half at 1:1,
like a half profit.
Yes, 50% of the position. If I close at 1:1, that still pays me better than trailing my stop loss to break even.
Interesting. And then if it goes against you, you still had something.
Yeah, exactly.
It was like a break even through a partial.
Yes.
Interesting. When it comes to time windows, I guess you came to the decision through your trades, and like these are where my better wins are, and these are where the bad trades are.
Yeah.
So you kind of focus like the days of the week that you did. Is there any reason you think that price could be moving more aggressively in these hours that you've chosen to trade?
I think it's just the time when liquidity comes into the market. I'm reading a very interesting book. It's called Mind Over Markets by, I think, James Dalton. It's about volume profile and it's about time price opportunities. He calls it TPOs. That it mentions that time is the essence of the market, because time restricts the market to give a certain move in that limited period of time. And if the market has to give, let's say, a $10 move, and if it has only 2 hours to do it, it has to make at least 50% of the move in the first hour. So I think time is a very good way to understand when the price is going to give a move and when it is not. So that's one of the reasons why time windows really gained a lot of importance for me in my trading.
I think that makes complete sense. That when volume liquidity is coming into the market, that's when movements naturally will come. Have you also stayed with forex pairs, or is only gold?
It's only been gold. Very recently, I started trading US 100 and US 30.
Okay.
Yeah.
Why have you stayed away from forex pairs now?
I feel forex pairs are a little complicated. That's what I feel. The gold is lesser complicated, but forex pairs, you have to really get into the technicals. You have to go very deep down into it. But honestly, I feel you have to do that anyway for every other asset. But for forex, I just feel that they're not my cup of tea.
I think, to be honest, it makes sense where, let's say, major forex pairs, they have their trends where you'll have bullish periods, bearish periods, consolidated periods, whereas gold is a trending thing. Like it's just going to go up. It's been going up, and every year it goes up. So you kind of have a built-in bias. Same with indexes.
Yes.
Apart from crashes like now that's happening, you just know, like, worst case scenario, look for a buy. So I think that helps frame things a little bit easier in terms of just advanced M1 technicals, which can get a bit tricky on forex pairs. Navigating towards you're now funded. Do you change technicals, which can get a bit tricky on forex pairs? Navigating towards you're now funded. Do you change your approach from prop firm, going to the challenges, trying to get funded as fast as possible? When you do have the allocations, what is your strategy then to actually, now ensure payouts?
So what I like to do is I like to be extremely aggressive initially in the evaluation phase. Once I clear it out, then I like to limit trades to 1 to 2 trades a month. And my goal is to take like 3 to 4% on 100K account. $3,000 to $4,000 in a month is good enough for a 100K account. You just paid $500 for it. So that's what I like to do. But what I've seen is that when initially what I did was I used the aggressive approach for the evaluation as well as for the funded phase, and that's when I made around $10,000-15,000 in payouts right in just like a month. But then the next month I lost all my funding. The next month I lost about $400,000 in funding. So then I realized, the aggressive approach is not going to work. I need to calm down when I'm in the live phase.
When was this situation? It was recently, or?
It was recently. This was about November, I think. November 2024. Yes.
Yeah, and I've seen people try all approaches with prop firms, and I think there's no right or wrong, but it's just how you have your backup systems where, let's say you take the conservative approach. I've seen people do it, but then they kind of copy their trades on all their accounts. Let's say they have 20 accounts, it's the same trades across all. But then the guys that I've seen do the aggressive approach successfully is to avoid your situation of like, okay, now I don't have any capital. Now I have to go back to demo and challenges for another month. And I lost a month of earning, let's say. So your 2-month earnings were 1 month high, 1 month low, but the average was probably ordinary average. But let's say Andrew NFX, I don't know if you've met him, but he's done very well in prop firms, and his approach is be very aggressive, but one account at a time. And he just goes for 2%. So then when he's got this 2%, put that account away. But it's just, if you mess it up, you mess up one, you don't mess up your, your full allocation. Now that you've also seen yourself as a prop firm trader and also an influencer, I want to hear, let's say because you're the largest in India and in general, very, very large influencer, have prop firms, let's say, treated you different in any way? Or has there been any weird situations where you had to use your brand to say, okay, I need the payout or something like that? Have you come across any of these scenarios? Yes, absolutely.
It happened with one of the prop firms, one of the very popular prop firms. I don't think they're very popular, but it did happen. So it was on a 100K funded account, and it was a $3,000 payout.
Okay, so not one that you'd expect them to do something about.
Yeah, okay. So it was $3,000 is fine. And I was accused of doing martingale. Now, so they had in their rules that they do not permit martingale. But martingale is basically adding additional positions after you've entered your position, right? That's what it is, right? Adding multiple positions or adding bigger positions after you have entered the first position, right? Now, what I did was in their account, so the trade was on US 30, okay? And the lot size they had was 20. The maximum lot size for US 30 they had was 20. So in one position, if I have to open, I can only open 20. If I have to open more than 20, I have to take another position.
Got it.
Right? So I opened 20. I wanted to open a position for 35 lots. I opened 20, then I opened 15. That trade made me about $4,000. Then when I requested the payout, I got accused of doing martingale. And then I don't understand, because do you not know your max lot size? Because if I have to open a 35 lot position, it has to be 2 positions.
Naturally so, and it won't be the exact same price. It will move naturally a bit.
Yeah, but it was exact same price. I was able to get the exact same price as well. Not exact. I mean, of course, there was minor difference, but majorly yes, the difference was in decimals. But that is what I got accused of. And then I was like, I don't understand how this is martingale, because I have to open that much position, and you're permitting to open that much position. So then there was a lot of back and forth, and then it was a platform that I was also recommending to people. I mean, I was not promoting. There was no sort of association with them. I was recommending to people because I was using it. I got about $10,000 in payout from them. Then I was like, you know what? I sent them an email, and I was like, you know what? If I've told people to use your prop firm, I also got to tell them that they've got to stop using your prop firm because you're not paying me. You're not paying our traders. And then they were like, please don't do that. We'd be happy to pay you. Let's keep this confidential. And yeah, that did happen. Story.
Okay, very interesting.
As a trader, it's very simple. You have to find an edge, and then you have to have a mind so you can follow that edge. But how do you know if you're performing correctly or not? You have to know your data. And TradeZeller is going to show you everything that you need beyond the surface level win rates and performance and equity curve. It's going to show you detailed reports. It's going to be your backtesting tool.
You don't have a choice. And a lot of people can look at it as a defeatist mentality. And I think that's people in general. Like you look at the general population, you have certain people that see the same situation of tax, economy, inflation, cost of living,